Air Freight plans to set up a new inland container depot in Ahmedabad. Sachin Bhanushali, CEO of Gateway Rail Freight, now joins us to detail the impact. Sachin, hi, good morning. Thanks for joining us. So, what's the throughput capacity of this depot, and what is it likely to do in terms of your overall capacity and your overall numbers going forward?
Okay. The idea behind setting up a fourth terminal in Ahmedabad essentially is to consolidate our position on the northwest corridor on which we are developing EXIM terminals for taking care of the requirement of the trade on the manufacturing route of India. At present, we are present in Garhi Harsaru in Gurgaon, Sahnewal in Ludhiana, and Faridabad in Haryana. These three terminals put together, we roughly have a design capacity of about 1 million TEUs, and at present we have an installed capacity of about 500,000 TEUs. We are operating at about 50% of that. We normally need to keep at least about a 25, 30, 40% buffer to take care of the peaks of the cyclical changes in the market. The fourth terminal, which is going to come up at Viramgam, will have a capacity of handling 150,000 containers, apart from being a second rail hub for us. At present, we are operating all our hub operations out of Garhi Harsaru. With the second hub, we'll be in a position to consolidate and reduce our operating cost to a very great extent. So it will be both a operating cost strategic move as well as reaching out to the market at a new by having a new point on the map as well.
Okay, in fact, your margins have improved quite significantly. Even if you look at your Q4 numbers, it's been a jump of 500 basis points. 29% is what you recorded. How much more do you think that you can improve your margins going into FY16 once these operational benefits kick in?
Yeah, Ekta, the advantage which is available primarily is by way of a reduction in cost because of the double stack operations that we do out of Garhi Harsaru, which is being operated as hub. The market at present is going through some kind of pressure on account of the exports having gone down over a period of last 6 months. So the market, the price is also under pressure, and the costs have gone up because the imbalances have gone up. We expect that we'll be in a position to maintain the margins that we have demonstrated in FY15 during the FY16, subject to improvement in the macro volumes over a period of next 6 months. I think the second and the third quarter are going to be crucial in terms of export volumes, but we'll be able to maintain the margins at the present level.
And how are export volumes looking?
As of now, the export volumes are flat. I think the international demand for both agro products as well as manufactured commodities out of India is at the lower ebb. The currency should actually be helping, but that doesn't seem to be giving any traction to the export volume. A lot will also depend on the monsoon contribution into the agro exports, which will start picking up from October onwards in the third quarter of the current financial year. As of now, it is flat. There is no direction in which the exports are moving in particular.
So would you expect flattish sales going into FY16 or maybe a marginal growth? What would your outlook be?
In terms of growth, the growth will come by way of our presence in Faridabad terminal, which has started just about a year ago. So we'll have some volume growth there. In addition to that, the imports are showing strength. So some amount of traction will be available on account of imports as well. Volumetrically, we may be flat on account of the numbness which exists in exports. But as far as the margins are concerned, we'll be able to retain both percentage margins as well as rupee margins at operating margin level.
Can you give us some comparables? How much did you do in terms of import growth and export growth in the previous fiscal as well as volumes totally? And how much are you projecting in FY16?
Yeah, sure. The exports over a period of last 6 months have shown a reduction, a drop almost of about 20%, whereas the imports have grown roughly by about 18-19% in both Punjab and NCR market. So the overall impact of it is flattish as far as the overall numbers are concerned. But the increase in imports with corresponding decrease in exports has resulted into capacity being wasted in export direction in order to get the imports from the port. So the growth that we experienced during FY15-16, as far as the volumetric numbers are concerned, we may not be able to maintain. But as far as the revenue and margins are concerned, we'll be able to maintain a similar number during the current financial year. We ended up with 177 crore rupees of operating margin in FY15. The growth that we experienced during that particular year was unprecedented on account of various advantages that we had on account of both the macros doing well, there being a corresponding increase in imports and exports, as well as we were able to harness our costs rightly. So all the things happened right as far as the last year is concerned. This year we are already seeing the exports pulling us down as far as our operating cost is concerned. So we may not get the kind of growth that we've experienced in 2015.
Okay, just one quick last question then, sir. You were looking at a rail division IPO. Is that on the cards, or where is the status of that?
We had mentioned earlier that the private equity investor in the company, Blackstone, had invoked a mandatory IPO. So the discussion with respect to the offer for sale and the mode of IPO are still in progress. So once that takes some shape, we'll be able to give an affirmative answer and make an announcement in this regard. So as of now, the discussions are still on.